Today's Monday, new week. Time right now is 8 o'clock, right on the dot. Um, I had a good weekend, a very productive weekend, I'm not gonna lie. So, on the Friday, was it the Friday? 20, I'm pretty sure the Friday is, I think it's the Friday, bro. I had to call my mentor, right? The Wednesday and the Friday, I had a really, really informative call with my mentor, right? And I didn't have enough time throughout the week to go back to those calls and take notes of them, right? So throughout the whole of the weekend, I was doing that. And bro, oh my gosh, bro. The first call was good, right? It was pretty good, a good call. The second call though, yeah, I'm not gonna lie. When I first started taking notes on it, I didn't really understand it. I tried back testing it and it wasn't really hitting for me. But bro, the second one, well, I watched it like 3 times. Yeah, I watched it 3 times, bro. Because I remember sometime on the cause like, bro, that's all that. What I just told you is all you need to become profitable, right? It's all you need to go from where you are right now to here. And he's like, all you need to do is just look at it over and over and over again until you understand it, right? The first time I looked at it, which was on call, and I didn't like I understood it, but I didn't really understand it to the fullest of its extent, right? Second time, it was all right. I was getting closer. Third time, got it. I tested it. I'm like, yeah, I understand it now, and I realized what I was doing wrong. So, bro, cause I missed like a trade on Friday, right? I'm like, how did I miss this trade? And he told me like, and he's been telling me this for a while. Not every trade is gonna be buttercup, ice cream, cake, and stuff like that, right? You have to think about it. You have to think about these trades before taking them, right? And he took a trade on Friday where he had a 1 hour inverse fair value gap in the way of his trade, right? But that 1 hour inverse fair value gap was already mitigated, right? And what the high time frame trend was telling us was that price was still bullish, right? Because we were still seeing high time frame fair value gaps get disrespected, high time frame bearish fair value gaps get disrespected, and high time frame bullish fair value gaps get respected, right? Which tells us that the story is still bullish. Price still wants to go higher. And what do we have higher? We had a 4 hour intermediate high that was also a previous day high, which was paired with other liquidity levels, right? We had an intermediate high as well. So there's reasons for price to go higher, right? And with the reasons for price to go higher and price saying that it still wants to go higher because we have bullish structure and we have higher highs and higher lows and things like that, we wouldn't really care about that 1 hour inverse fair value gap because price is telling us that it still wants to go higher. Of course, that 1 hour inverse fair value gap, we're still gonna keep it into keep it there to know that it's there, right? But we wouldn't really care about it because price is saying it wants to go higher and things like that, right? But first, of course, we need to wait for that 1 hour inverse value to get tapped first to see how price reacts off of it, because price can react off of it in a bearish manner where price just disrespects bullish value gaps and respects bearish value gaps. So what we need to do first is wait for the reaction off of that inverse value gap to see what price wants to do. And we waited for that. Well, he waited for that. And what he's seen after was price was still respecting bullish for value gaps and respecting bearish for value gaps. So what he needs to see for his entry was a 5 minute confirmation, and a 5 minute confirmation will tell him that okay, price was to go higher. And another thing that I realized, bro, every trade that played out throughout the week, even if it was a missed opportunity, they all had 5 minute confirmation. And every trade that I took throughout the week that lost, they never had any 5 minute confirmation. They didn't have none whatsoever, right? The thing that he also taught me on Friday was the reasons why I lost my trades throughout the week. The trade that I took throughout the week was because I was trading in the opposite direction of the trend. And me trading in the opposite direction of the trend without 5 minute confirmation is like, oh my gosh, it's like the trade is bound to lose, right? So it's like things like that. And I think something that I also realized throughout the week was that after I do my top down analysis, I usually just stay stuck on the 5 minute. Like I usually don't go back on the high time frames to see what's happening. After I do my high time frame analysis, I stay on the 5 minute. But I realize that I have to also look at what price is doing as well, right? I need to mark out everything, right? Because the trade that I took on Tuesday or Wednesday, I think Tuesday or Wednesday, price had, I wanted to take a buy, right? And there was a 1 hour inverse mitigated fair value up above, in the middle of my TP and my entry, right? Yeah, my entry, right? And price has swept our London high on a 30-minute time frame and respected it and started rejecting, right? And because I didn't see that, because I didn't have that 1 hour inverse value marked out and that 30-minute and that London high marked out, I didn't see that, right? And because I didn't see that, I didn't see the rejection after, and I took the buy, and price just hit my stop loss. Yeah. Another thing that I also learned was when you're using the correlated assets to figure out your bias and stuff like that to give yourself more confirmation, right? Example, let's say you're trading in a 4 hour for value app, right? And you see that the 15-minute kind of close above that 4 hour or below that 4 hour, right? Let's say above the 4 hour for a bullish for a buy order, right? You also obviously the 4 hour correlated with the 15-minute, right? You need to see what the 4 hour is doing as well. Because let's say the 15-minute close above the 4 hour, right? But on a 4 hour time frame, you see that we have a 4 hour A plus rate, right? And prices are rejecting, right? You need to see what's happening on a 4 hour, because now you won't be able. Now it's not best for you to take a buy, right? Especially if you see that bearish fair value apps are not being respected and bullish are not being disrespected. There's no point of you taking a buy. Instead, it will be best for you to take a sell instead, because there's multiple confluences telling you that prices go lower instead of going higher. But yeah, yeah, I had a lot of time, well, not a lot of time, but I did a good amount of journaling and stuff like that. And let me see what else I learned. I did my weekly recaps. I did my weekly recap to see what the similarities are between the winners and the losers. Let's see. Yeah. So. Also, something that I also realized that it's just coming so clear to me is that every time I take a trade without deep analysis, every time I take a trade with surface level analysis, it always fails. So that's something that I also realized as well through my journals. What else? Oh, if I'm seeing accumulation, right? Let's say I'm seeing accumulation on the 5 minute, 15-minute time frame, right? But in that accumulation, right? Let's say, you know what? Yeah. Let's say coming into the day, right? I have a bullish bias, right? And on the 5 minute time frame, I'm seeing accumulation, right? Of course, if I want to take a bullish AMD, right, the manipulation is supposed to be lower, right? The accumulation happens here and manipulation lower and distribution higher, right? But if you see accumulation, right, and the manipulation happens higher and you're bullish, that tells you that, okay, price, so that something's wrong. Price may not give us the bullish AMD, and we may just be going higher instead. But of course, you need to see what's happening to see if bullish gaps are still being respected and if bearish gaps are still being disrespected. To tell you that, okay, price may not give us this bullish AMD, and we may not get a bearish AMD either. Price may just want to go higher. Yeah. Oh, another thing is that, oh my gosh, trade management, not risk management, trade management. If you are in a trade, right, when you're in a trade and price is, let's say, going for a 1 to 2, right, and price is higher than a 1 to 1, drag your stop loss to a 1 to 1. You should not be walking out of that trade going break even. You should be every trade that you're profit a lot in, man, you should be walking out of there with something. You should not be losing anything. You should not be losing nothing, especially with that trade that I took on like Tuesday, right? Where price was so close to my TP, and then I let price come down, and I only made $100. Honestly, bro, if I know that I'm bullish, right? If I know that I'm bullish, and price is going up, and I see a 3-minute fair value gap get inverse to the downside, that tells you, okay, you know what? Price may be reversing now, and let me close the trade, right? Another thing that I also found out is that when price goes close to like a liquidity level, like a target, and leaves it behind and comes back down, that price is now juicier. It's now way juicier. Let's say it's an intermediate high right here, right? And price goes up, doesn't take it out, and goes back down. That's even juicier because that's an intermediate high paired with relative equal highs now. because now it's just so juicy now, you know. Um, and yeah, that's about it. I learned a good amount this week, and yeah, now because of the war and everything, we may get bullets price action for gold because the U.S. because USD may be down, and what's it? What did I learn? It was the gold hedges the U.S. dollar. So if the U.S. dollar is down, then gold goes up. And since the war has been happening, so the gold should be up right now. But let's see what's happening. Let's see. We have news today at 10 a.m. It's only PMI though, so we should be good. We should be good. That's it. That was a 10-minute long video. God dang. Okay, but yeah, let's get into it right now. Yeah. Let me even show you the trade. I see I was right. But this is all-time highs, bro. Oh my god, we're back to all-time highs today. But yeah, let me even show you that trade up. Like that's what I'm talking about. See how we had that accumulation here, but the manipulation was higher, and then we had a 1 hour that got tapped into right here, but we still have a 15-minute fair value gap right here that got disrespected right here, telling us that price was still higher. Also pair with how the 5-minute closed above the 1 hour, and the 5-minute is correlated to 1 hour, the 1 hour to 5-minute, and we have 5-minute confirmation. We have the 15-minute getting disrespected right here, disrespected right here. But the bullish 15-minute got respected right here. And we got 5-minute confirmation to the high end. What do we have as targets? The 4-hour intermediate high, pair with the previous day high, pair with the intermediate high, pair with the relative equal high. So we have multiple reasons to go higher. And at that point, when this gets taken out, you want to go break even. And yeah, so yeah, that's what I learned, you know. But yeah, let's go get into the day now and see what's happening. Start off with the top down analysis. Okay. Oh my gosh, this is looking very bullish, my guy. I'm gonna lie to you still. Just mark out everything. I'll see if I find this how this will. So I just want to mark out everything, just to know where everything is, you know. Just gives me a little bit more confidence in what's happening. I want to know where everything is. after I'll just hide it to not confuse myself. So we're having bullish for a lot of gaps get disrespected. I mean, bearish for a lot of gaps get disrespected. Now bullish get respected, telling us that price wants to go higher. What are you doing back here? Weren't you supposed Definitely leaning bearish though.